It's Thursday, October 16th, 2025. Welcome to your news update on Blip Brief. Small, but almost everything updated every weekday. Okay, let's jump straight in. Indian equity benchmarks really pushed higher yesterday, climbed near a one-month peak.
That's right. Both the main indices finished up. We saw a move of about, what, 0.7%? Pretty solid.
Yeah, a good solid rally, especially with all the, global noise we've been hearing.
Well, it felt like a mix of global hope and domestic confidence. The push really came from those, well, surprisingly dovish signals out of the U.S. Fed.
Ah, the rate cut hopes kicking back in.
Exactly, that maybe cuts aren't quite so far off. Combine that global vibe with, real optimism here about the corporate earnings season. That seemed to fuel the buying.
And it wasn't just a general lift. Some sectors really stood out. I mean, the BSC Realty Index just flew, didn't it? Jumped over 3.1%.
Yeah, huge move. It suggests the market's looking past high rates, betting on housing and infra really kicking on.
And you need banks for that, right? The nifty PSU Bank Index also looked pretty strong, climbing 1.7%.
Definitely. Shows growing confidence, I think, in their balance sheets, maybe their recovery stories, better credit flow signs, perhaps.
Looking at individual stocks, it felt like consumption names were back in favor. Bajaj Finance was up sharply, around 4.0%.
And Nestle India, too. Almost the same jump, nearly 4.0% up. When you see both finance and staples moving like that, it does suggest maybe deeper confidence trickling through.
Okay, but let's get into the earnings weeds, because it wasn't all smooth sailing, was it? Axis Bank dropped a bit of a bomb.
Yeah, that was the big headline grabber. A sharp 26% drop in net profit for the September quarter.
Whoa, okay, that sounds bad for a major lender. What's the story behind the number? Is it like a sudden operational issue?
No, not fundamentally, and this is crucial. You need to look past the headline figure. It was almost entirely driven by a very large one-time provision.
A provision, so setting money aside.
Exactly. Think of it like a cleanup. They proactively put funds aside to cover potential future losses tied to some old crop loan types they're discontinuing, getting it off the books.
So less about new bad loans, more about tidying up old stuff.
Precisely. More housekeeping than a signal of fresh trouble.
Yeah.
In fact, if you strip out that one-off hit, their core performance, the net interest income, actually went up by 2%.
Okay, that makes sense. The market often looks through those one-offs if the underlying business is sound.
Right. Now, contrast that with Nuvoca Vistas. They delivered a really positive surprise. Swung back to profit from a loss last year.
And what drove that turnaround?
A huge surge in EBITDA, up 62%. That points to some serious improvements in how they're running the business, efficiency gains.
That kind of growth story, that operational strength, that's exactly what attracts big investment, isn't it? Like Hyundai's latest announcement.
Oh yeah, that's a massive commitment. Hyundai unveiling a $5 billion investment plan for India by 2030. That's about, what, 45,000 crore? Their most aggressive plan here yet?
That's not just testing the waters. That's doubling down on India as a core global hub, right? Manufacturing, not just selling.
Absolutely. But, big plans need big money. Whether it's foreign investment like Hyundai or domestic M&A, look at Torrent Pharma.
Right, they're planning a huge bond sale.
Huge is the word. 14,000 crore they're aiming to raise. And that's specifically earmarked to fund their takeover of JB Chemicals and Pharmaceuticals. Shows the kind of capital needed for these big strategic moves.
Okay, so from corporate deals to the bigger picture, that need for stable finance brings us nicely to the currency market. The rupee had quite a day.
It certainly did. Its sharpest single-day rise in about 4 months. It clawed back 75 pays from that all-time low we saw recently.
And that wasn't just market drift.
No. This was decisive action, strong intervention from the RBI. Reports suggest they were selling dollars quite heavily, more than expected.
So what's the signal the RBI is sending there? Basically drawing a line in the sand.
Pretty much. They're showing they're not comfortable with too much speculation against the rupee. Telling the market, look, we have reserves, and we're willing to use them to defend this level. That alone seemed to shake out some short positions.
And this comes just as we get some, well, surprisingly good news on inflation, finally giving the RBI some breathing room.
Yeah, retail inflation really cooled off in September. Dropped to just 1.54%. That's an over 8-year low. A really significant drop.
So inflation's down, the rupee's stabilized by intervention. Does this mean rate cuts are imminent?
Well, that's the million-dollar question, isn't it? The RBI governor actually addressed this. He said, paraphrasing here, that while room open for rate cut, the time is not opportune.
Ah. So still cautious. Why?
Caution seems wise. Yes, domestic inflation is low, which is great. But they're likely still wary about global factors, potential commodity price spikes maybe. Plus, remember, our trade deficit actually widened a bit in September to $32.15 billion. Imports are still quite strong.
Right, imports mean continued demand for dollars. And speaking of global factors, oil prices ticked up about 1% yesterday, and that seemed linked to geopolitics again.
Directly, it followed that statement from President Trump, who mentioned that Prime Minister Modi had assured him India would stop buying Russian oil.
Wow, okay. That's a big diplomatic move if confirmed and followed through. Cutting off a major buyer impacts supply perceptions.
Instantly, markets reacted immediately, pricing in potentially tighter global supply down the line if India steps back from Russian crude. Shows how quickly high-level diplomacy hits market prices.
And the diplomatic heat seems to be rising elsewhere, too, particularly with China. They've taken India to the WTO.
Yes, over India's subsidies for electric vehicles and batteries. China is basically claiming those subsidies give Indian EV makers an unfair advantage. That's the formal, slower burn pressure.
But there's a more immediate issue, too, right? Something about magnets.
That's the one causing more immediate operational worry, I think. China's put new export curbs on rare earth magnets. These things are vital components in loads of tech.
So what's the impact for Indian companies?
It could be a real headache. Think automotive sector, electronics, industrial machinery. They rely on these specialized magnets. If the supply chain tightens significantly because of these curbs, it could mean production delays, higher costs. A reminder that global supply chains are still fragile.
Okay, so you've got trade tensions, inflation worries, even if domestic numbers are good, geopolitical uncertainty. Sounds like a perfect recipe for
Gold. Exactly. Precious metals time.
Yeah.
Gold rallied again, hit an all-time high, actually, up about 0.8%.
classic safe haven move.
Textbook. It's that flight to safety, you see, when investors get nervous about global tensions, about the economy, maybe anticipate future rate cuts in the U.S. weakening the dollar. Gold becomes the default uh-oh asset.
Right. Okay, let's shift gears for our final segment. Away from the immediate market jitters to something more foundational, a big tech breakthrough for India.
Yes, this is a really significant milestone. India's chip moment, as some are calling it.
Tell us about it. What actually happened?
The key event was the first commercially packaged multi-chip module, or MCM, rolling out of Kaynes Semicon's facility in Sanand. And importantly, it was delivered successfully to a U.S. client, Alpha and Omega Semiconductor.
Okay, multi-chip module, Kaynes Semicon, OSAT facility. Break that down. Why is this such a big deal?
Okay, so OSAT stands for Outsourced Semiconductor Assembly and Test. It's the critical back-end part of chip making. After a chip wafer is made, the OSAT facility takes the individual chips, packages them up, tests them, makes them ready to be put into actual devices.
So it's not just designing chips, it's the actual physical assembly and testing for commercial use.
Exactly.
Wow.
Kaynes delivered around 900 of these complex intelligent power modules to a known U.S. company. It proves India now has commercial capability in this advanced packaging space. It's a major step for the whole India semiconductor mission, moving from plans to actual delivered products.
That's genuinely exciting progress in building domestic capability, but it also makes me think about something else. The SEBI chief recently warned about a, quote, looming quantum apocalypse. How does building chips connect to, well, quantum threats?
Ah, that's a fascinating link to draw. It's about future-proofing what we build today. As we create more sophisticated digital infrastructure powered by chips like these ones from Kaynes, running everything from banking to communications, we have to make sure it's secure against future threats.
And quantum computing is a big future threat.
Potentially, yes. Quantum computers, when powerful enough, could theoretically break much of the encryption that protects our data and systems today. So the SEBI chief's warning is basically saying, fantastic that we're building this advanced tech capability, but we simultaneously need to be developing quantum-resistant security. We need to secure the future we're building, starting now.
And a powerful thought. Building the future also means building its defenses. Really important context as India steps up its tech game. That brings us to the end of this deep dive. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.